Hello traders, and welcome back to Explain the Charts. Today is October 22nd, 2025, and we are taking a deep dive into the New Zealand dollar versus the US dollar, symbol NZDUSD. The pair has been showing significant indecision recently, and we're going to break down the latest news and then hit the charts to see what's really going on. First, let's look at the fundamental picture, which is currently driving the narrative for this pair. Multiple sources confirm a persistent bearish bias, with a key theme being to sell rallies. This sentiment is heavily influenced by the Reserve Bank of New Zealand, or RBNZ. Despite New Zealand's annual inflation recently accelerating to 3%, hitting the top of the RBNZ's target band, the market is overwhelmingly pricing in another rate cut in November. Analysts are forecasting a 25 basis point cut, with some even suggesting a small risk of a larger 50 basis point cut. This expectation for monetary easing is a major headwind for the Kiwi dollar, as lower interest rates typically make a currency less attractive to foreign investors. Adding to the bearish case, New Zealand's business confidence has fallen, and reports indicate that hiring and investment plans have weakened. This economic softness further solidifies the case for the RBNZ to cut rates to stimulate the economy. Meanwhile, the US dollar has shown periods of strength, placing additional downward pressure on the NZDUSD pair. Now, let's switch over to the charts and see how this fundamental story is reflected in the price action. Looking at the daily chart, we can immediately see a clear and established downtrend that began after the pair peaked above 0.6350 in late September. Since then, we've seen a series of lower highs and lower lows, which is the classic definition of a downtrend. The price has been consolidating for the past week, trading in a tight range, which aligns perfectly with news reports describing the market as stuck and awaiting a catalyst. This period of consolidation after a sharp move down often precedes a continuation of the trend. Let's zoom in on the price action since September to get a clearer view of this downtrend and the recent consolidation. Here we can see the aggressive sell-off at the beginning of October, followed by the current sideways movement. The last several daily candles are showing small bodies and long wicks, known as doji or spinning top candles. These formations indicate significant indecision in the market, where neither buyers nor sellers are in full control. This indecision is logical given that traders are likely waiting for the next major economic news or the RBNZ's official decision before committing to a direction. The key resistance level to watch on the upside is the top of this range, right around 0.5750 to 0.5760. This area has capped multiple rally attempts in the past week. Above that, the psychological 0.5800 level comes into play as the next major hurdle for bulls. On the downside, immediate support sits at the bottom of the range, near the 0.5700 level. A break below this would be a very bearish signal. This would open the door to retest the October 14th low, which our data shows at 0.5679. Beneath that, we must consider the year-to-date low, which news reports place around 0.5485. However, it's crucial to note the extreme volatility this pair has seen. We had a massive flash crash event on November 8th of last year, where the price wicked all the way down to just below 0.5000 before recovering. This level represents an extreme long-term support, but it also serves as a stark reminder of the pair's potential for huge, rapid declines. Now, let's move to the hourly chart to dissect the current trading range more closely. This timeframe gives us a much clearer picture of the recent sideways battle between buyers and sellers. We can clearly define the boundaries of this consolidation channel. The upper boundary, or resistance, is firmly established around the 0.5750 mark. The lower boundary, or support, is holding around 0.5706 to 0.5710. Price has been oscillating between these two levels for several days. Zooming in on the action from October 19th onwards really highlights this range. For traders, this range presents two primary strategies. Range traders might look to sell near the top around 0.5750 and buy near the bottom around 0.5710, placing tight stop losses just outside these boundaries. However, the more widely anticipated trade is a breakout. Breakout traders are waiting for a decisive move and a close outside of this channel. A sustained break and close above 0.5760 on the hourly chart could trigger a short-term rally towards that 0.5800 resistance level we identified on the daily chart. Conversely, a break and close below 0.5700 would confirm the bearish momentum is resuming. This would likely lead to a quick test of the 0.5680 support area and potentially much lower. Finally, let's take a quick look at the 15-minute chart. This is for the intraday traders and scalpers. As you can see, the price action is very choppy and lacks a clear, sustained trend within the larger hourly range. Attempting to trade this on a very short time frame can be difficult and lead to getting stopped out frequently. The price is essentially moving from one minor support or resistance level to the next without strong follow-through. For now, the smarter play even for short-term traders is likely to wait for a breakout from the larger hourly range we just discussed. This would provide a clearer directional bias and higher probability setups. So, let's go back to the daily chart to recap and put everything together. The fundamental outlook is decidedly bearish due to the high probability of an RBNZ rate cut in November. The long-term technical trend is also pointing downwards. The market is currently paused in a consolidation phase, coiling up for its next move. Let's summarize the key price levels to watch. Immediate resistance is the 0.5750 to 0.5760 zone. Major resistance sits above at 0.5800 and then the 0.5850 area. Immediate support is at the bottom of the current range, right around 0.5700. Major support levels are the October low of 0.5680 and then the long-term support near the year-to-date low around 0.5485. Now for our unbiased predictions. The highest probability scenario, which I would place at around 70% likelihood, is a bearish continuation. The combined fundamental and technical pressure is immense. A decisive break below 0.5700 would be the trigger, and this would be reinforced by any further dovish commentary from the RBNZ or renewed strength in the US dollar. A lower probability scenario, perhaps 30%, is a short-term corrective rally. This would be triggered by a break above 0.5760. Such a move could see the price push towards 0.5800, but it would likely be viewed by many as a selling opportunity given the strong underlying bearish fundamentals. The main thing to watch for is the RBNZ November meeting, which is the most likely catalyst to break this deadlock. Thank you for watching this analysis on Explain the Charts. Before we go, please remember that this video is for informational purposes only and should not be considered financial advice. Trading involves significant risk, and you should always conduct your own research and analysis before making any investment decisions. Be sure to manage your risk carefully. We'll see you in the next video.